Should you buy SpaceX stock? The truth behind the $1.75 trillion IPO. On June 12th, the biggest IPO in human history hits the stock market. Bigger than Saudi Aramco, bigger than Alibaba. We're talking about SpaceX, ticker SPCX, going public at a $1.75 trillion valuation. And right now, millions of people are about to do the exact same thing they did with Facebook, with Uber, with Coinbase, with Rivian, and lose up to 55% of their money in the first year. So in this video, I'm not going to hype you up. I'm going to do something almost nobody online is doing. Actually read SpaceX's official filing, the prospectus, the real financials, and answer two questions. 1, should you buy SpaceX at all? And 2, the question that actually makes or breaks your returns. When should you buy it? Stick around to the end because there are 3 specific dates on the calendar that could be far smarter entry points than day 1. Let's get into it. Why everyone's losing their minds. Okay, quick context. SpaceX is finally going public after years of Elon Musk saying he never would. Here are the headline numbers. Ticker SPCX on the Nasdaq. Price, a fixed $135 per share. Shares sold, about 555 million. Money raised, roughly $75 billion, the largest IPO ever recorded. Valuation, around $1.75 trillion. To put that in perspective, on its first day of trading, SpaceX would be worth more than Microsoft. That's not a startup, that's one of the most valuable companies on planet Earth, the moment it opens. And the demand is insane. 21 banks underwriting it. Retail investors, that's you and me, earmarked for 30% of the deal, which is about triple the normal amount for a mega-cap IPO. So the hype is real. But here's my first rule of investing. When everyone is screaming buy, that's exactly the moment to slow down and ask why. So let's look under the hood. Here's the thing almost no one on YouTube is telling you, and it's the single most important point in this entire video. When you buy SPCX, you are not buying a rocket company. I know. Let me explain. In early 2026, SpaceX absorbed xAI. That's Elon's artificial intelligence company, the one behind the Grok chatbot. So today, SPCX is actually 3 completely different businesses bolted together. Let me show you each one because they could not be more different. Business number 1, connectivity. This is Starlink, and honestly, this is the crown jewel. In 2025, Starlink brought in $11.4 billion in revenue and, pay attention, $4.4 billion in actual operating profit, growing almost 50% a year, over 10 million subscribers in 164 countries. This is a real, profitable, money-printing business. If SpaceX were just Starlink, this would be a much simpler conversation. Business number 2, space. The rockets, Falcon, Dragon, Starship. This is the part that made SpaceX legendary. It earned $4.1 billion in 2025, but it actually lost about $660 million because developing the Starship rocket burns around $3 billion every single year. And business number 3, AI. This is xAI, Grok, and X, formerly Twitter. And this one is hungry. It made $3.2 billion in revenue in 2025 and lost $6.4 billion. Let me say that again. One segment lost $6.4 billion in a year. So when you add it all up, about $18.7 billion in total revenue for 2025, but a net loss of nearly $5 billion. And here's the part the cheerleaders skip. Those losses are getting bigger, not smaller. In just the first quarter of 2026, the company lost almost $2 billion. So what are you really buying? One profitable broadband company chained to 2 giant cash-incinerating bets on the future. Orbital AI data centers, a base on the moon, cities on Mars. Whether SPCX is worth it comes down entirely to whether those bets pay off. And the filing itself straight up admits that some of these markets, and I'm quoting, do not exist today. Now let's talk price, because this is where it gets spicy. At $1.75 trillion on $18.7 billion of revenue, you are paying roughly 110 times revenue. Not profit, revenue. And the company is losing billions. Here's the comparison that should make you blink. Mature, profitable tech giants, the kind that actually make money hand over fist, usually trade somewhere between a few times revenue and maybe 10 times revenue. SPCX is asking you to pay 10 times more than that on a company that loses money. Now, I'm not saying that's automatically crazy. If you genuinely believe Musk is going to dominate global internet and artificial intelligence and build the Mars economy, then maybe you think it's cheap. But you have to be honest with yourself about what you're doing. You are not paying a price based on what this company earns today. You're paying a price based on a future that has to go exactly right. That's a bet, not a bargain. 3 more things buried in the filing that every single buyer needs to know. Number 1, you get almost no say. Elon Musk will control about 82% of the voting power through special super voting shares. The shares you're buying, they add up to roughly 11% of the total vote. So if you were hoping to have a voice as a shareholder, you don't. You are a passenger on Elon's rocket, literally and financially. Number 2, no dividends. Don't expect a check. Every dollar gets reinvested. Number 3, because of that ownership structure, SpaceX qualifies as what's called a controlled company, which means it's exempt from several of the normal Nasdaq rules that protect minority shareholders like you. None of this is a scandal. It's how all of Musk's companies work. But you deserve to know it before you click buy, not after. Now let's zoom out, because this is the part that could literally save you thousands of dollars. Look at this. This is a list of huge, famous, beloved tech companies and how their stocks performed after their IPOs. Facebook, Uber, Coinbase, Robinhood, Rivian, Snap. A massive chunk of them got crushed in their first year, with some samples averaging losses around negative 55% over 12 months. Now, I want to be fair and honest with you, because that's the whole point of this channel. That 55% number comes from a selective sample, and it mixes different time periods. So don't treat it as a guarantee. Treat it as a warning pattern. And the pattern is rock solid. Hyped tech IPOs very commonly drop 20 to 40% within the first 90 days. Why? Because the first day price isn't built on fundamentals. It's built on hype, scarcity, and FOMO. And when the excitement wears off and reality shows up, the price usually comes back down to earth. Fitting for a rocket company. Oh, and one more SpaceX specific trap. Because it's such a massive new listing, Nasdaq rules could automatically pull SPCX into the Nasdaq 100 index after just about 15 trading days. When that happens, index funds are forced to buy it, no matter the price. That can artificially pump the stock in the early weeks. So that exciting early high you see, it might not be real. It might just be robots buying because they have to. Okay, the moment you've been waiting for. Should you buy SpaceX now? Meaning, at the open on day 1? My honest answer? Day 1 is the single worst risk-reward moment you will get. You're paying a fully hyped, fixed price. There's zero public market price history, no public earnings report yet, no shareholder power, and the losses are growing. That is a stacked deck against you. But, and this is important, that does not mean SpaceX is a bad investment forever. It means your single biggest advantage is patience. So here are the 3 windows the calendar hands you for free. Window number 1, after the first earnings report. That's roughly September to November 2026. Once SpaceX reports its first quarter as a public company, you finally get to see real, audited numbers. Are the AI losses shrinking? Is Starship hitting its milestones? Those are the exact things that justify the price. Why bet blind when you can wait 1 quarter and actually see? Window number 2, around lockup expiration, the December 2026 window. Here's a little-known secret. When a company goes public, early insiders and employees are locked up. They can't sell for a while. When that lockup expires, a flood of new shares hits the market, and that extra supply very often pushes the price down. For a patient buyer, that dip can be a gift. Window number 3, let the index bump fade. Remember those forced robot purchases I mentioned? If that artificially spikes the price in the first few weeks, just wait, let it cool off. Let the price find its real level. So let's make this actionable. If you have real conviction and you absolutely must own SPCX on day 1, fine, but do it the disciplined way. 1. Treat it as a small position, a high volatility satellite holding, not the core of your portfolio. 2. Use a limit order, never, ever a market order at the open. First day volatility is wild, and a market order can fill at a price that makes you sick. 3. Decide your max loss before you buy, not after. And honestly, for most people watching this, the smartest move isn't buy SpaceX or don't buy SpaceX. It's recognizing that when you buy matters more than if. Here's the one question that cuts through all the noise, all the hype, all the FOMO. Ask yourself, can I watch this stock drop 40% without it wrecking my financial plan? If the answer is no, you already know what to do. Wait, watch, be patient. The rocket isn't leaving without you. Look, SpaceX is genuinely one of the most impressive companies humans have ever built. Reusable rockets, global internet, the dream of Mars. None of that is in question. But an amazing company and an amazing investment at any price are two completely different things. The hype machine wants you to forget that. Don't. If this gave you a clearer head about the SpaceX IPO, do me a favor, hit that like button, because it genuinely helps the channel reach people before they make an emotional decision with their money. Subscribe if you want more no-hype breakdowns like this one. And drop a comment. Are you buying SPCX on day 1, waiting for earnings, or sitting this one out entirely? I read every comment. Quick reminder, I'm not a financial advisor, and this video is for education only. Always do your own research. I'll see you in the next one.